Right, you may or may not have heard, but there is billions more in spending coming. The federal government just announced this week its 2024 federal budget, and most of this discussion here today is going to surround housing or investors and really how this affects our real estate market, our real estate landscape, and if you're an investor, perhaps how this affects capital gains. So I have a few notes here. So in their commitment to build housing supply, because we know that this lack of supply directly influences our housing prices. The demand is so pent up, whether it's new immigration, whether it's first-time home buyers, whether it's upsizers, people pulling equity, gifting funds to first-time home buyers. You get it. There's a lot of wealth sitting in our homes given the sheer amount that these homes are trading for. So in a way to alleviate that and make it a little more accessible, we really need to pump up supply. We need to infuse our economy with new homes, and the government has unveiled that they plan to unlock 3.9 million new homes by 2030. They need to build 3.5 million homes by 2030. That is the government's undertaking. Now, their budget is geared towards generational fairness, is what a lot of these articles say, a lot of what this budget entails. So, part of that plan, part of making housing more accessible, if you will, is this 30-year amortization with mortgages. Now, if you had an opportunity to listen to the previous video from this, where Snezana and I broke down, now, if you had an opportunity to listen to the previous video on this, we really touch on who benefits on a 30-year amortization, who can actually have it work in their favor, and mind you, this only applies to pre-construction and new build properties. So something to think about with the 30-year amortization that comes into play August 1st, 2024. They've also increased the amount that you can pull and take from your RRSPs, so that in turn increases your home buyer's plan. Right? They've increased that from $35,000 to $60,000, which allows for larger down payments, because when the purchase price is larger, you naturally need to have the complementary deposit and down payment to follow. So, moving on, I know that this is probably one of the hotter topics. It has to do with investors and capital gains. So, regardless of whether it's a corporation, a trust, or an individual. So there was hold on, before I go there was talk of implementing a wealth tax, if you will. Apparently there's been studies done where this increase in capital gains going from half to 2/3. So today, if you're an individual and you hold an income property, you are subject to capital gains tax, and that is 50% of that gain. 50% of that gain is taxable, right? So what they're proposing is, instead of this wealth tax, really it's only going to be 1% of Canada's top earners that are going to fall under this change in the inclusive rate of the capital gains, going from 50%, which is half, to about 2/3, so 66% they're calling for. And it's for people with more than $250,000 in capital gains will pay taxes on a larger portion. So if you look at our appreciation for the general homes in our Greater Toronto area, you are going to be immediately shocked, immediately upset. I can imagine you're going to have these emotions, because this is what I'm having in terms of conversations with investors. Now, if it's a corporation, if it's a trust, you are automatically taxed, right? Regardless of if you meet that $250,000 threshold, it's an automatic increase in the amount that you're taxed for capital gains immediately. So this comes into play, I believe, June 25th. The government in their budget is really proposing that this increase should not affect 99.87 Canadians. I'm very curious to see how this unfolds. So a lot more in terms of what this budget entails, whether it's for small businesses, post-secondary students, disability, and there's a few other factors here, but that's not really the gist of what I'm here to provide. Really, I'm talking about how this affects real estate investments, real estate enthusiasts. So I'm very curious to know your take on some of these budgetary items. How do you see this 30-year amortization playing out for first-time home buyers? How do you see this capital gains tax and the changes within affect you or perhaps other corporations or trusts that you see? Do you think people will continue to be interested in investing in Canada? Is this going to be a deterrent for those looking to invest in Canada? I'm very curious to know your thoughts, so please share them with me.